few aspects of the guidance note. In future course of in the future we'll have the discussion about the same in detail. Next, we have internal audit. Today, internal audit has become mandatory under the Companies Act, but of course with certain threshold limits. So, internal audit is now applicable to all listed companies, and this internal audit is also applicable for unlisted public companies, provided they exceed certain threshold limits provided under the Companies Act here, under the section 138. So, the private limited companies also need to appoint internal auditor. Thresholds rationalized for unlisted public companies. Clarification final rules that internal auditor may or may not be an employee of the company, whether engaged in practice or not. Appointment of internal auditor for private companies. Turnover is around greater than or equal to 200 crores, then appointment of internal auditor has to happen. Then outstanding loans or borrowings from banks or from public financial institutions greater than or equal to 100 crores, the same appointment of internal auditor has to happen. And then appointment of internal auditor in unlisted public companies. Paid up capital is greater than or equal to 50 crores, then it has to be applicable. Then in case of the turnover greater than or equal to 200, like that there are certain limits based on which the internal audit is applicable. So based on these limits, just look at your clients whether internal audit is applicable. But can the statutory audit be internal auditor? Answer is no. Statutory audit can never be internal auditor. So now internal auditor should be a chartered accountant. Answer is most of the cases chartered accountants only are appointed for as an internal auditor. But internal audit can also be done by a cost accountant, company secretary, or MBA or a BCom graduate, provided they have a relevant experience. And is it an outsource? It should be from the outside people or inside? It can be from inside people also. But internal audit function should be there as part of the section 138. Now let's move on to the crux of our discussion. Very interesting. Higher auditor accountability. Very interesting issues. Some of the issues are has multifold implications for the practitioners. Prologue. And look at several financial scams actually question the governance, question the rules regarding governing the auditors. Whatever changes that has come in under the Companies Act that is called as higher auditor accountability is nothing but those provisions which are to govern the auditors, to govern the auditors. Now, when I was attending my intermediate classes, that is my P2 or as the case may be PCC or IPC now it is called, we had a reputed faculty in Chennai. So generally I have an habit of sitting in the back bench, so he called me to sit in the first bench and to advise me to sit forever without going to the last bench. Then I sat at the first bench. Just to question that faculty, I asked him, sir, you're teaching auditing classes, you tell me what is an auditor. He asked me, you tell me what is an auditor instead of you asking me, you are a student. Like that I got scolding from him. Then I said, auditor means should find out a fraud, sir. Like that I told. Oh, auditor means should find out a fraud. He said, auditor means you should find out a fraud is what is your opinion. Okay, but I will tell you one story now. He said, the story is, he was very good faculty, very good guide and a mentor for all the students in Chennai. So he told a story. He told a story about Kingston Cotton Mills case. He said, under the Kingston Cotton Mills case, under the British case, it was held that auditor is not is a watchdog and not a bloodhound. Sir, why are you scolding a dog and all, sir? No. If you want to scold, you can scold, sir, but why are you scold publicly like that? No, the decision was held like that. So I asked him immediately, sir, will the decision be written like this? In the watchdog, like that they will use in the decision. Because at that point of time I was unaware of those facts. Are you telling deliberately, sir, like that? I argued before 300 students. He scolded me, saying that you sit down now, don't ask further questions, we are wasting the time of other students. Then, sir was a very good mentor. After that he mentored me like anything. The one change that we brought in was bringing me from the last bench to first bench. And whatever because of that faculty only. If you have not brought me from the first bench, last bench to first bench, then I am not here. That faculty, subsequently, I qualified as a chartered accountant and I was presenting for the students. Then he told, one fine morning he called me, Sathya, you just come with me for a presentation. I said, what? To the members conference. He said, sir, I'm members and I won't present, I'm only present for the students. You come with me, he said. Where, sir? Hyderabad. Sir, tickets? No, I will arrange for everything, you come with me. Then, as usual, morning I went and we had coffee and then we started. Sir, I told him, what is the question that you are going to ask? Now also after qualification, you will keep asking questions. Yeah, sir, one question, sir. Sir, if you remember, one time you scolded me, watchdog and all. So, you told Kingston Court in this case, audit is a watchdog and not a bloodhound. Sir, under the Companies Act, under section 143, subsection 12, now the auditor has to report the fraud to the central government. Now, tell me, sir, should Kingston Court in this case still holds good? Like that I asked. Then he got the boarding pass. He gave a look such a way that he was very angry. Morning itself I started questioning. Then we got into the flight, and then while getting down into the Hyderabad, he said, your question is a good question. Then, now let's discuss on the way. Now he said, I asked him, sir, you tell me the answer, I will question you, you tell me the answer, you are a professional now, you can't question me. Neither as a student you should have questioned me, now also you should not question me, now I'll ask you questions. Now, auditor, how does he perform his duty? He asked me. Sir, auditor, how does he perform his duty? While going to he'll go to the client place, he'll ask for information, then he will tick, no, you tell me the definition. You are a qualified chartered accountant now. You are a qualified chartered accountant, you are expected to know the definition. Yes, sir, auditor should perform his duty based on the standards on auditing issued by the ICI is what I told him. He said, standards on auditing based on ICI means, so that means that is the framework for doing your work? I said, yes, sir, seems to be right. That means, auditor, while performing his duty, auditor, the definition, the requirement under section 143 subsection 12 says, auditor, while performing his duty, if he comes across a fraud against the company, the same need to be reported to the central government, is what that says. Then he asked me second question, how does an auditor perform the duty? You told it is standards on auditing. Now, what is the primary objective of auditor? You remember my inter classes? He asked. Sir, I told I don't remember, sir. Then I told him, you tell me what is the primary objective? You have been in the audit for 5 years, so tell me now. Like that he questioned me. We know practically everything, but theoretically how will we be able to tell immediately? He said, the primary objective of the auditor is expression of opinion on the financial statement. And then he asked me, what is the secondary objective? I thought, secondary objective will be finding out a fraud. I told him, secondary objective is finding out a fraud. He said, no, secondary objective is not finding out a fraud. Secondary objective is auditor while performing his duty, if he comes across the fraud, how to deal with the fraud is secondary objective. Sir, what is that you are confusing, sir? You are trying to confuse me. For this only you brought me from Chennai. He is very close. From this only you got me to Chennai. I would have enjoyed with your friends. No. Today you are going to speak to the members for 1.5 hours. Like that, how many hours session? For me 1 hour, for you 1 hour. Today you will speak for 1.5 hours. 75% of the time you have to speak. Half an hour only I speak. Sir, that means you tell me what should I speak. Like that I asked. So we have another 1 hour to go. He explained that it is very far. Shamshabad airport to Hyderabad, it is very far, so we was discussing about it. Then he told, let's explain, you talk about section 143.12 itself in detail. Then I spoke. Now he told, secondary objective is auditor while performing his duty, if he comes across a fraud, if he has detected the fraud, how to deal with the fraud is secondary objective. Then I asked him, sir, if the auditor fraud happens in the company, is auditor liable? He said, you tell me the answer again. Auditor is whether liable or not. You have an answer with yourself. Auditor did the duty using standards on auditing. Most of the frauds will get unearthed when you use the standards on auditing. But if you are negligent, God also cannot save you. God also cannot save you. I asked him why. He said, if you have exercised the procedure, then there is no chance that the fraud would have got missed out. Okay, let us assume the fraud would have got missed out. If it is below materiality, no problem at all. Client may not know it is below materiality. You will never communicate to the client that is what is materiality number. How do you compute materiality? I asked him, sir, materiality we compute. No. He asked me, how do you compute materiality? You will compute materiality on standards on auditing. So the materiality is computed based on the standards on auditing. An auditor will perform the duty based on the framework. The framework has materiality. So whatever is material fraud only, the auditor has to deal. If it is a lesser amount of fraud, then the auditor may or may not deal. So that is what the conclusion we derived. And we concluded that under section 143 subsection 12, only material frauds need to be reported to central government. At that point of time, there was no clarity under section 143.12 whether material frauds need to be reported or 1 rupee fraud also to be reported under section 143.12. Now, when we got out, sir, I asked him, sir, if this is a discussion, how to put it across? Instead, you go in the same direction. Immediately, what I did, sir, you were saying Auditor, while performing his duty, if he comes across a fraud against the company, you are saying against the company. He said, come on, you are now you are right professional. Against the company, sir, I asked him, if the company is incorporated to make a fraud, there can be a possibility the company itself can be incorporated to make a fraud. Then whether the same need to be put as a comment, come on, he said, Sabash, you are in the right direction. That need not be reported. Sir, if the company incorporated for doing a fraud, that cannot be reported, that need not be reported. First of all, we should not associate with the client. The company is incorporated to make a fraud, you came to know, you should resign from the client. There is no requirement for it to report to the central government. When do you report? When you've taken a decision to continue with the client, then you will report to the central government as well as report as part of your CARO, the fraud matter. When the company itself is in the fraudulent business, the company is incorporated to do a fraud, then you are not supposed to continue as an auditor of a company because it's a conduct issue, an ethical issue, is what he concluded. Then I did not leave him. Auditor, while performing his duty, if he comes across a fraud against the company by the employees and officers of the company. So, creditor does a fraud against the company. Whether the same need to be reported to central government under section 143, section 12. He said, no. I said, yes sir, it need to be reported. No, employee and officer. No, is there any other person included? Look at the BAR Act, he said. He said, no sir, it is not included. Then only the fraud committed against the company by employer and officer of the company need to be reported to central government. Sir, who is an officer? Whether director is included? Answer is director is an officer of the company, he is included. Employee is included? Yes, employee is anyway included. Next I asked him a question. Sir, there was an employee. He retired as a voluntary retirement basis. He came into the company as a consultant. Now he does a fraud against the company. He thought once and said, for this I don't have an answer. You tell me the answer. Sir, if he comes as a consultant, then he is not an employee, he is not in the payroll. He is neither an officer of the company. Accordingly, if he can do a fraud and need not be reported to central government. Immediately asked me, can you use your common sense, he asked. Then what is it? You increase your thought process. Even he was an employee, he will not wait for becoming a consultant to do a fraud. When he was an employee, he would have been doing the fraud. After he became a consultant, there is a continuing fraud that has been done by the employee, possibility. Then, if it's a continuing offense, we can interpret saying that from the employee capacity has done, that has started in the year when he was an employee, now continues in the year when he was a consultant, which the fraud is against the company, then the same need to be reported to the central government is what he told. Everything got over. We looked into the basic definition of fraud. What is fraud? Another 20 minutes is there to reach the venue. We looked into the basic definition of fraud. He told me to read the definition of fraud under section 447 of the Companies Act. So 143.12 says, you report the fraud to the central government if while performing his duty, if we come across a fraud. The fraud has to be defined under the Companies Act. The fraud is defined under the Companies Act, under section 447. When we look at the 447, the intention to commit a fraud is also a fraud. There is no need to make a wrongful gain or wrongful loss. For example, the auditor, again I questioned them, sir, that means auditor should know the astrology and psychology of the, what sir? Like that I asked. Yeah, that is what is expected. You raise all these points in the members' conferences. Like that he told. Then, the intention, the malafide intention, I intend to do a fraud. The intention of doing a fraud also, whether there is a wrongful gain or a loss, the same need to be reported to central government. How will the auditor, without having a substantial evidence, will report? So, that session was attended by the Ministry of Corporate Affairs Secretary. I didn't know what is the role of a secretary. Then he told me to speak for 1.5 hours, and then the matters were taken up. Then after going, he told, raise all these issues and send me a mail is what the guest told me. I didn't know who is he, but at that point in time I just emerged. And sir gave me 1.5 hours time. Sir only spoke summarizing what I spoke. Then those matters were considered. Because of that, the opportunity flowed in different direction to present the papers today, and because of that opportunity. Now putting it across very simply, June 5th there came a notification. June 5th notification clearly said only material frauds need to be reported. When we discussed at that point of time when the provision came, materiality was not a consideration, it was never provided. Today they said material frauds only to be reported. How do you compute materiality? Based on the framework. And guidance note on fraud reporting also has been provided by the ICI, and most of the questions are answered in that, what we have raised at that point of time. And it was all the experience of the members that has come into as a guidance note of the ICI. All the answers have been provided. Continuing offense, then in case employee leaves, he joins as a consultant. Every aspect is covered in that guidance note. Almost most of the questions are covered. Now today, to understand a member clearly, intention to commit a fraud to be reported to central government is fine. How do you substantiate the intention? How do you find? You cannot go into the mind of another person and then think what is he doing, or you cannot give drugs to him and make him to say in the night on what is that happening, what is this happening in the mind. That cannot be possible by giving anesthesia. All those things are not possible. So looking at that scenario, when you have only a concrete evidence, you will go and report a fraud. Because the form also, ADD4, I think, yeah, it is ADD4, I think. The ADD4 also has a column which says, what is the evidence you have? That has to be provided for. So to conclude, auditor today has a dual role. And finally, after the session, I told my sir in the flight, sir, whatever sir Kingston got on his case is scrapped. Auditor should be a watchdog and a blood hound. And I went home. And he also called me and said at 8 o'clock, yes, auditor is a watchdog and a blood hound going forward to tell to all the members this information, like that he told. And that is a factual. When there is a requirement to report a fraud under Companies Act, then how can you expect the auditor to go to the audit to only to find out, to only to express an opinion? Because the sword is in his neck. If it does not report fraud, we have to know what is the implication. There is a punishment. There is a refund. There is a fine or penalty that can be levied from 5 lakhs to 25 lakhs. Then imprisonment provision also gets attracted. So obviously, when you are keeping a sword in his neck, then he cannot go to the client or client location or a client to just express an opinion on the financial statement. He should do that only, but also along with that, you should also think about the fraud that might happen in the client location. So these are some of the implications which I wanted to bring to the desk of the members. So today, as per section 143.12, even though the fraud definition says intention cannot be the reason to believe. It can only be a reason to believe, but never the conclusive evidence which can be reported. Second, the 143.12 talks about auditor. Whether auditor is defined under the Companies Act? No. So now, auditor includes a statutory auditor, cost auditor, secretarial auditor. It applies to all three professionals. Okay, it's a race. If a cost auditor reports, then statutory auditor and secretarial auditor are in trouble. If a secretarial auditor reports, then cost auditor and statutory auditor are in trouble. They will think, the regulators will think that cost auditor only did the work properly, and then the other two auditors are in collusive with the management. Possible. Second, who will be most affected is statutory auditor, because statutory auditor is the person who has a hands-on audit of the financial statement, which is the ultimate thing of a company. Other things are all subsidiary to it, like your secretarial audit as well as cost auditor. It is only to the management they report. But whereas we report to the members of the company, who will be affected more is we. If we are not able to find out a fraud, how can a secretarial auditor and cost auditor can find out a fraud with a lesser number of provisions? That means if he is able to find a fraud, we should have found it. If the regulators will deem that we are in hand and glove with the management. Third thing is that one thing we have to look at, there should be a coordination with the other professionals when you are exercising the work, so that these things does not boil down, so that when you have a coordination with them, we will know what they will be reporting. So there are certain timelines like 45 days to 60 days. After 45 days, the matter should be reported to the board of directors. They have to deal with the fraud. After that, it has to be reported to the central government. 60 days time limit has been given, which we will discuss shortly. Looking at this perspective, audit is definitely moving from written as moving from watchdog to bloodhound. I would say it's a watchdog as well as a bloodhound. Then deterrent provisions, criminal liabilities, fines, imprisonment, heavy civil liability. Now let's move on to see appointment of auditors. I'll summarize. Let me not read out the provisions which is there in the slide. Today, appointment of auditor under the Companies Act 2013 is on two bases. One, for the companies where rotation does not apply. For the companies where rotation does not apply, and for those companies where rotation applies. To which companies rotation does not apply, we will see shortly. But let us assume for a company rotation applies. What is that concept? Today I am qualifying as a member of the institute. I am a member of the institute, I start up my practice. There are two choices available for a member. Either he can join in the partnership firm as a partner, or he can start his own practice in his own name and flair, that is nothing but his sole proprietorship. Now, the rotation concept should be applied in two aspects. One is partnership firm, the other is your sole proprietorship. In case if you are a sole proprietor, in the case of the rotation, the maximum period for which you can be appointed is 5 years. Sole proprietor, I am a single member who is practicing in my name. Then I will be in the rotation concept, I will be appointed for a period of 5 years. It's a happy news, right or wrong? When you are appointed for a company for 5 years instead of 1 year, it is a happy news. But there is some rider also over it. No benefit will be given for a chartered accountant, and no benefit has been given under the Companies Act 2013. I can conclude very well. It's only a liability increase or opportunity decrease. There is never an opportunity increase. Looking at that perspective, under the Companies Act, the rotation concept is very exciting to know that you are appointed for a period of 5 years. But the override is, every year the members of the company should ratify your appointment. So if they don't ratify, it amounts to removal. It's an easy way of taking out. So it's nothing but effect, it is annual appointment only. But for a period of 5 years they will appoint you, and every year the ratification has to happen by the members of the company. So now we are discussing about the sole proprietor. Now let us understand, I am a member today, I am planning to practice, now I am moving to partnership firm. Now if I join a partnership firm, the choice is, if it is a sole proprietor, the respective individual member will be appointed as an auditor. If it is a partnership firm, the partnership firm can be appointed as an auditor of a company, and one of the partners can sign on the financial statement of the company. While a partnership firm is appointed, the partnership firm can be appointed for a period of 10 years. 10 years. And the respective partner in the partnership firm can sign only for a period of 5 years. 5 years. So to put it across very simply, one member, 5 years. One member, a chartered accountant who is a member, who is into the practice, in rotation, it is only 5 years he can sign. The partnership firm can be appointed for a period of 10 years, but the respective member can only sign for a period of 5 years. Then the period of 5 years is akin or attached for a period of 5 years to a member. So a member can only sign for a period of 5 years. Next, the question comes from the members that what happens after 5 years? If I am a sole proprietor, after 5 years, the cooling off period starts. I cannot be the auditor of the company for next 5 years. After the 5th year, second to 5th year, the third set of 5th year, you can be the auditor of the company. You can be the auditor of the company. Now let me come to the partnership firm. Partnership firm can be appointed for a period of 10 years. After the 10-year period, the cooling off period of 5 years starts for the partnership firm. Even though it is a cooling off period of 5 years for a partnership firm, the partnership firm cannot be appointed in the 4th leg of 5th year. Why? Because by default the company will appoint a partnership firm only. So they will hold office for 10 years. Accordingly, only in the 5th leg of 5th year, 5 set of 5th year only, 21st year only, the partnership firm which exited in the 10th year can be appointed in the 21st year of the company. Let me explain you. Sole proprietor, simple, 5 years, you will audit, 5 years cool off period. First 5 years he was an auditor, second 5 years he will be cooling off, he cannot be appointed. Third 5 years he can be appointed. There is a company, let us assume Tata Steels. A is the auditor for 10 years. A is the auditor for 10 years. A firm or A, B, C firm was the auditor for 10 years. In that X was a partner, Y was a partner who signed for 5 years. Now, Tata Steels, rotation applies. Now this firm has to go out. Tata Steels will appoint a sole proprietor or a firm. It will appoint a firm. When it appoints a firm, by default the firm will be there for 10 years. Even though the cool-off period for the previous firm was only 5 years, by default, by harmonizing the provision of 5 years, cooling off of 5 years and 10 years of appointment, in effect, the rotated auditor cannot be the auditor for next 10 years, and he can only be appointed in the 21st year. I think I am clear about the point.
Yes, I am. Yes.
Okay. Now let me put across some more complication. This is a basic provision we discussed. The straight provision when you read, this is what you will understand. Let's interpret, discuss, and we'll see what has not been provided in the enactment which is causing confusions. Now, the auditor, yes sir.
But if the signing partner in the first 5 years has changed his firm,
that's what. One by one we'll discuss. Same, all the scenarios are covered. This first scenario only we are going to discuss now. Now, in the course of 10 years, ABC firm is appointed. First partner X signed only for 2 years. First thing that happened was that partner got deceased. He only signed for 2 years. Third year is not there. So, third year, fourth year, fifth year expires. No use at all. The third year, the second auditor will take a charge and he can only sign for a period of 5 years. In total, the firm can only be there for 8 years. One partner can sign for 5 years. That partner, the second year, he expired. After signing, he expired. Third year, fourth year, fifth year, he could not sign because he is not there. So you cannot interpret saying that another partner will be appointed, will sign for 3 years. The fifth year will go for another partner. No. The 3 years will expire without any use for the firm. Then the next partner can only sign for 5 years. In the 8th year, no, not 8th year, in the 7th year, all the it will call for a rotation. It will call for a rotation. It will call for a rotation. Possible. Sir's question. The second year, the respective partner shifts to another firm. So by the process of shifting to another firm, from that firm he cannot sign. Because firm is appointed here. So, and not only that, he has deprived this firm for 3 years. To second year he exited. Because of the 3 years, no other person can sign. So, only the second partner can sign for a period of 5 years. When the period has reduced to 7 years again, and 3 years goes waste for the firm. No, that will get reduced accordingly. 7th year he gets, then 10 years from that period. 3 plus 7. 17th year, 18th year the rotation will start. Like that.
No, the partner who has left this firm and joined another firm, he can sign over there from that firm.
I am coming to the next discussion. Next I am coming to that discussion only. Now this partner, we exited from here. Let us assume the first scenario, he signed for 5 years. Sir's point, we will discuss second. Let us assume, intelligently one person is there. I am that person. I am signing for first 5 years. Next, another partner signs for 5 years. What firm saying? You leave this firm. Go to that firm. You have the relationship with the client. Go to that firm. From there, we will get another partner. We will exchange the partners. We will exchange the partners. We will exchange the partners. That partner let him come here. That audit comes to us. You go there. That audit goes there. We will mutually agree. You be there for another 10 years. He be there for another 10 years. Again you come back here. Like that we can plan is what we are planning. Whether it is possible. There are two interpretations possible. There is no clarity on it. Some experts say that just because the signing partner goes and joins in that firm also becomes disqualified. Because cooling off period gets attracted. It is because of this partner that gets attracted is what one expert say. But that opinion I don't take it up. It is a job. He can change the employment also. So now that partner goes there. Firm is eligible, but he is not eligible. Firm is eligible to do the audit, but he is not eligible is my view.
No. See, when this partner leaves this firm, join that firm, this firm goes for another 5 years because this firm is for 10 years.
Correct.
Okay. So after 10 years, that firm is appointed.
Correct.
That firm, not this partner, but other partner signs. Then this partner signs. So then 20 years is within.
No. If this partner went there, that is what I told you.
I'll explain you. A and B is a partner of X.
Correct.
Okay.
X firm.
X firm. A signs Tisco for 5 years.
Yes.
Then A leaves and he joins Y firm.
Correct.
Okay. And the partner in Y firm are C and D. C leaves Y and joins A.
Correct.
Then X firm, Mr. B signs for 6 to 10 years. This possible?
Not possible.
not possible.
Why? No, Mr. B. Mr. B is in X firm. Mr. X firm was appointed for 10 years. Listen. X firm, listen to me. X firm is appointed by Tisco for 10 years.
Yes, got it.
He has got two partners,
Got
A
it.
and B.
Yeah.
A signs for 5 years,
Yes.
leads the firm.
Yes.
Then Mr. B signs for the next 5 years.
Yes.
A joins X firm,
Got
Y
it.
firm,
Yeah. Y firm. Y.
Y firm. And Mr. C of Y firm joins X firm.
Yes.
Okay? So 6 to 10 years, Mr. B signs.
Yeah.
Okay, then 10 years खत्म हो गया.
Yeah.
Then the audit comes to Y firm.
Correct.
In Y firm, two partners A and D.
Correct. A and D.
A and D.
Correct.
D signs for the
First 5 years. Next for
Next 5 years,
can
Mr.
do.
A signs.
No.
A can sign. A can sign in
It's my interpretation.
Huh?
It is an interpretation of the experts.
Listen. A can sign from 16 to 20th years while he is a partner in Y firm. Because Mr. D has signed for 11th
So,
to 15th year.
we are bringing out an interpretation where the A has enjoyed the cool off period already.
Yes.
Yes.
I am bringing out an interpretation where,
Yes.
first of all, when the firm who is having an ineligible firm for a period of 5 years, how can he ever be a partnership firm? That is my interpretation.